welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Vakil, and these are headlines that we are tracking at this hour. It's a lackluster start to expiry week. The Nifty trades near 10,750. Its IT is the top sectoral gainer, while metals are among the top sectoral losers. And Hero MotoCorp is a top loser on the Nifty after Goldman Sachs downgrades the stock to sell, citing potential headwinds. Futures of the stock are seeing fresh short positions. And four IT stocks comprise the top 5 gainers on the Nifty 50 index. Buzz of an impending buyback from Infosys is leading to a boost in sentiment. And metal stocks are among the top losers on the Nifty, while Hindalco and Vedanta have seen longs unwind. JSW Steel has seen fresh shorts in the futures market.
Well, viewers, thanks for tuning in to Countdown. My name is Neeraj Shah, and let's pull up what the markets are doing at the current point of time. Precious little if you were to look at the headline number. Few jagged edges. We've corrected about 1/3% intraday for the Nifty before bouncing back yet again, but holding steady. 710,736. Not a bad afternoon of trade, you must say. Looking at the US markets on Friday, one would have been worried, but for now it's not looking all that bad. The mid caps and the small cap indices will also come up on your screen, and they too lying absolutely flat. 0.5% for the small cap index is almost as good as flat, really. But yeah, slight bout of underperformance for the small caps. Let's bring up the heat map first, and then we'll get in the mid cap and the small cap indices performances as well. Almost even Stevens. This is how we started off. I mean, there was maybe 4 or 5 stocks more in the green. Now there are 4 or 5 stocks more in the red. But this is almost how we started off. Hero MotoCorp, on the back of that downgrade from Goldman Sachs, is down about 4%. Bajaj Auto playing catch up of sorts, or so to say, or getting impacted by that, down about 2.5%. IOC has come off a little bit in the session today, so after a 5% downtake, another 2% gone. JSW Steel, that's a set of losers. Titan is looking slightly wobbly as well in the session today, and the big boy Reliance Industries lying quiet, but about a 4% in the red. What about the gainers? Well, IT, that's singularly the index that you should be monitoring. That's that one space. Infosys buyback, low valuations, all put together. I think those stocks have done reasonably okay for themselves. Let's get up on the screen what the mid cap and the small cap indices have done as well. Quickly take you through some movers and shakers before Agam throws some light on the liquid universe. But here's how we stacked up today. PFC, REC, the duo have done okay, about 3% higher. In fact, PSUs are doing well because Engineers India 2 is about 2.5%, BOI is about 3% as well. So select PSU names have done okay. IGL about 2.5% higher in trade, and then Aditya Birla Fashion about a couple of percentage points. Graph Finance corrects about 2.5%. Both companies, Bandhan Bank and Graph Finance, say that they are unaware of any kind of proposal, not denying it, but down about 2.5%. Divi is about 2.5% lower today, and SRF, which has gone through some grind last couple of days in today's session, to down about 7% in trade, and Jubilant Foodworks about 5.5% or 6% up in trade. HEG and Graphite India too correcting a little bit. If you can also just quickly have the small cap index on the screen and just show you what's moved. This is of course a YTD performance, but the one-day performance on the small cap index would be interesting. It will show you what's happening in today's session. As you can see, again, not too many gainers, a couple of IT names, persistent, etc. But a fairly interesting list of losers. HEG Graphite feature out here as well, but JK Tyre, CEAT, and the tire companies too correcting in the session today. Some of it could be finding their way in the FNO universe as well. But Agam, how is the broad setup looking like?
Well, it's largely range bound when it comes to the Nifty, and we have seen a little bit of weakness. There's no doubt about that. But we have seen the benchmarks move within a certain range on an intraday basis. Of course, it is expiry week. It's a truncated expiry week. Tomorrow's a holiday, so we essentially had just about 2 more sessions left. But that will be Wednesday and Thursday before we see the final expiry come through for this year. Nifty rollover standing at 32%, and there has been a little bit of unwinding December series on expected lines. January, on the other hand, is seeing a little bit of an uptick, but I reckon to a certain extent there are shorts being built into the system at this point in time. The Nifty banking futures again seeing a surge in open interest, as we have seen over the course of the last 1 week. There has been a lot of accumulation towards shorts for the Nifty bank futures too. But let's move on and take a look at the wicks. Now it's come off it did hit the mark of around 16 and it came off. And as a lot of analysts have been pointing out, as long as it doesn't trade above 16, 16 and a half, well, you know, but the probability of volatility is lower. That said, in today's day of trade, there has been a spike in around the 10,900 put and the 11,000 call. The 11,000 call, of course, that's typical because that's what we've seen through the course of the day. And I reckon a lot of these traders will look to eat the premium at the 11,000 call. Of course, considering a lower probability of the Nifty finishing above that mark. And that explains your open interest distribution. It is the 11,000 call which has the maximum open interest, but we're also starting to see some build up in around the 10,900 call as well. Of course, on the lower end, it is a 10,500 put, which continues to see most amount of traction, at least in the near levels. But moving on, let's also talk about some stock futures. And Jet Airways is right at the top. Now, this one hasn't really moved as much, but we are seeing a significant accumulation in January futures, and the rollovers have certainly picked up. And this is perhaps to a certain extent unwinding in the current series. The next one is SRF, and SRF, of course, is under quite a bit of pressure because that is down at around 7%, and we've seen 50% rollovers coming in there. Jubilant Foodworks is the other one, as Neeraj was pointing out. It's been very strong. It has had a strong few weeks, but for now we're seeing some amount of profit taking, and even the December futures are seeing an accumulation of open interest towards shorts. And Bharti Infratel was the other interesting one. The rollovers standing at around 35%, but longs building into the system in the January future. So we're going to watch out for that as well. Of course, cumulatively for December and January, there has been a little more unwinding. So I reckon this short covering in Bharti Infratel. But on the whole, Neeraj, it's been a very mixed, very mixed cues coming in from the futures and options space right now.
Well, mixed it would be. A short expiry. Tomorrow is a holiday. Global markets tentative. Let's focus on specific stocks then. The government may be looking at extending yet another soft loan to the sugar industry as it looks to push up ethanol production. Yash Kapadia is here to tell us exactly who benefits from the dole out, or the proposed dole out, I might add, Yash, because I reckon this is a possibility, not a done deal as yet.
Yes, Neeraj, good afternoon. So this is basically an extension of what the government announced back in June of this year, wherein they had announced that it would be giving out loans to the tune of 4,400 crores to the existing sugar mills for enhancing their ethanol capacity. Now, what we gather from the PTI report is that the Food Ministry has received a total of 282 applications, amounting to a total of 13,400 crore rupees of soft loans, which is far higher than what the government has mandated. Of these, they have already accepted a total of 114 applications, so they have exceeded their target, for which they will be giving out loans to the tune of 6,000 crore rupees. So this is basically an extension to that order which the government had passed earlier in the year. The move will be positive for a lot of the sugar companies as they are looking to expand their ethanol production. So watch out for something like Dwarikesh Sugar, Dhampur Sugar, Balrampur Chini. They are all in the fray of extending almost doubling their ethanol production capacity. Also, the move would be positive for the non-molasses based distilleries as well, as the government looks to extend these loans to them for the production of more ethanol. So these are the companies you need to watch out for.
Yeah, thanks for bringing us those details. But moving on, another stock which has been in focus today is Hero MotoCorp, which is the top loser on the Nifty after Goldman Sachs has downgraded the stock to sell, citing potential headwinds. It also projects a 17% downside on the stock going forward. And Yatin Mota is here to give us all the details in the report. Yatin?
Afternoon, Agam, and if you look at Goldman Sachs, they have been, changing their ratings on a lot of these auto stocks recently, and Hero MotoCorp is one of them. In fact, today they have downgraded Hero MotoCorp to a sell from a previous rating of neutral. Not only that, the target price has been reduced to a level of 2,773 versus the earlier target of close to 3,200 rupees. So almost, 400 rupees kind of a target price change is what we have seen from Goldman. Of course, this is after the meeting that they had with the Honda management, in which the Honda management really spoke about how aggressive that they are in increasing the market share for the domestic Indian operations. And in a scenario wherein Honda is looking to strengthen their presence in India, along with gains in market share, that clearly does not augur well for market leader Hero MotoCorp. MotoCorp. In fact, Goldman also believes that the new launches that they have done, both in the scooter segment as well as in the motorcycle segment, have not been able to create some kind of a market buzz, and the volumes have remained low for these new launches. So on the back of this, plus given the fact that we are talking about BS6 emission norms, in which companies like Hero MotoCorp can face some bit of headwind, given the fact that they do not have a big R&D history. So in a scenario wherein competitors are aggressive in the marketplace, your new products are failing to create buzz in the marketplace, and more importantly, when it comes to the emission norm compliance, Hero might face some headwinds according to Goldman Sachs, and probably that is the reason why they have not only cut the earnings estimate but also the rating on the stock.
All right, Yatin, thanks for bringing us those details. And of course, Hero MotoCorp, as Yatin has suggested, is one of the top losers on, the Nifty. I want to talk about the IT pack. And, as we have been highlighting over the previous few days, we have seen a little bit of a buzz return to Indian IT. Now, one thing that's actually playing in favor of Indian IT, perhaps, is because of so much weakness that these companies have seen over the previous few weeks on account of the strengthening rupee against the US dollar. But what's also now playing out is that there's a certain realization that Infosys, specifically in this case, is reaching the end of the one-year moratorium since the last buyback it had carried out last year. And after that, there is an expectation that we could see a buyback being announced. Now, the expectations as far as the street is concerned is around $1.6 billion, as Bloomberg has already reported. We also have another news report suggesting a number very close to it. We already spoke about a bunch of brokers who are assuming and working with a figure of anywhere between 11,200 to, approximately 11,500, 11,600 crores worth of a buyback, which will be very much in line with what we've seen for Infosys in the last year as well. Anti-broking is putting the buyback number at 800, which is at a considerable premium to the current market share, current market price, because you see Infosys is currently trading at 650. That said, now there are some other guesses, and according to one report that also suggests that the buyback may not come as soon as in December, in the last 3 days of December, but it's possible that the board could consider it along with your results. That is the 11th of January, or around 11th, 12th of January. That's when Infosys usually comes out with its earnings for the third quarter. So that could be another reason. In terms of some key numbers that I want to address is that when it comes to its payout policy, the current capital allocation implies a yield of around 3% and further 7% yield, which includes special dividends as well as buyback. And these are just some of the numbers that we need to consider. We already know that the management has spoken about this particular dole out, and it's only a matter of time before this buyback comes through, because it certainly is on the cards. So we're going to keep an eye on that one, and perhaps that's one reason why we're starting to see a little bit of an uptick, specifically in case of Infosys over the past couple of sessions, Neeraj.
Well, let's wait and watch. Today's session, the IT stocks certainly doing reasonably okay for themselves. The question mark only is, can they continue this bounce, trading or hovering around the 200-day moving average? We'll talk to our guest technical experts about that. Nevertheless, the next piece, and that's on another export-oriented sector in a stock, is Lupin. Lupin and Abb-Vie announced a partnership to develop and commercialize a novel cancer drug. Upon successful completion of the regulatory development and commercial milestones, Lupin is eligible to receive total milestone payments of up to $947 million. Darshan Mehta caught up with Raj Kamboj of Lupin and began by asking him about the drug that the firm has out-licensed to Abb-Vie.
Let me regard this deal as a landmark deal, and I will elaborate that. Specifically, this particular drug has a potential to be first in class worldwide, and also has a potential to be first to market globally. And the treatment option for many of the hematological cancers today is not there, and this provides very clear potential for those cancers where there is, which are difficult to treat and have little to no treatment today. And so that's part of the excitement. But let me elaborate a little bit more. First in class globally doesn't come that easy because you have to start with a concept. You have to understand the disease pathology. You need to understand the patients. And then you need to really say, okay, now what can we modulate through a small molecule, a potential drug, which can make a difference in these patients? So we started that journey about 5 years ago. And at that point in time, there were no tractable small molecules which were available for this particular target, which is called MALT1. And we started designing these inhibitors specifically and sparing all other targets. And we were able to successfully do that and then design in pharmaceutical properties to be able to test in laboratory systems to be able to take it forward in the regulatory environment and successfully take it to the clinical development and eventually to the for the treatment option for these patients. So at the moment, we have a clinical candidate which has been very nicely optimized and in terms of having the right properties. And we tested it in extensive cancer models, and we saw great results. Not only us, the world leader in hematological cancers, very clearly Abb-Vie is, and they recognized the potential of this opportunity and agreed and then tested our LND 700110 in their best of the models and really gave a green light on all of the results which we actually shared with them. They were excited, and that led to the culmination of this potential partnership, now leading to this deal today.
Dr. Kamboja, how much have you spent on R&D on this drug itself?
So we don't break it down, you know, by program to program. I gave you the duration, but I think, as you know, roughly Lupin spends 10% of its revenues on various R&D. Total R&D spend globally for Lupin is about 10% of its revenues.
Okay, how big is the market for this? Because you started 5 years ago, where you said that there wasn't a big market. Currently, what is the competition like in this drug that that will come into the market?
So let me clarify, Darshan. I mean, the market potential is very huge. What I was highlighting was that this drug has potential to work in cancers where there is no treatment option. But it is also providing opportunity to be superior option for some of the treatments which are already currently being developed. So let me give you the market size, and we can provide you more details which are we have supported by market research references. So that in 2025, the market for hematological cancers is projected to be $80 billion worldwide. So it's a very large opportunity, and where, as you know, where there is no treatment option today, that is a very significant opportunity for it to capture a significant part of that potential.
Dr. Kamboja, can you tell us, see, right now it's in clinical. By when will this drug be ready to be marketed and come into the market? How much more time is it expected to take?
So specifically, this is still completing what we call the IND enabling studies, regulatory studies, which are required to go into patients into the clinical development. So this currently would be regarded as a preclinical development. That also is exciting that this particular size and the deal, the dynamics are based on three different aspects. One, the potential of the drug in areas where there is no treatment, and the opportunity of being able to provide a superior treatment for the cancers where hematological cancers where there is some option but not satisfactory options. But also because of the unmet medical need, there is an accelerated pathway of development because regulatory pathway for opportunities like this, US FDA and European and Japanese authorities provide faster development cycles so that the drug can be provided in a faster way. And the pathways are known as accelerated pathway of development, as well as based on the clinical results could be breakthrough designations as well.
Okay, you've got $30 million as upfront payment for it, and then you said that the total milestone could be close to $950 million. This is depending on a lot of ifs and buts, right? So how did you calculate this $950 million?
So 947 million precisely is the number, and it is distributed in the various jurisdictions and multiple clinical indications because the opportunity and the potential of this drug is to go into multiple indications. And the main jurisdictions where the milestones will be attached to would be the success in US, Europe, and Japan. And each one of them will have distinct milestones to be paid upon successfully achieving those, and in addition into multiple indications.
And just to clarify,
and then
yeah,
on the commercial sales, there will be
go on,
double-digit royalties on the commercial sales.
Okay,
yes.
Just to clarify, the commercial rights in India.
So on the
commercial rights in India will remain with Lupin, and Abb-Vie will market it in US, Europe, and Japan, right? Is that where? Is that right, sir?
Yes, those three major markets, but for the rest of the world as well, they will have the commercial and marketing rights.
Okay, I was listening.
So India rights are commercialization rights.
No. I was listening to the con call, and I believe you all said that there are two other programs or two other molecules also which are into clinical phases or will get into clinical phases. Can you give us more details on what the NDD pipeline is of the company?
Sure. So the two programs which we highlighted are already in patient studies, meaning they are in clinical development stages. One of them I will start with is for solid cancer, solid tumors. And the first indication, it has a potential to go into multiple cancers, but the first indications which we are going is for non-small cell lung cancer, and specifically for RAS mutated non-small cell lung cancer, where there is worldwide no treatment. So the opportunity is very large, and in initial limited number of patients, we are seeing some good success in that program. The challenge there is RAS mutated patients are difficult to get, and so it takes slightly longer. But the opportunity for accelerated development is there, and we'll be happy to, as we get more data on that, we'll be happy to share. So that's a very decent opportunity already in patient trials. Another program is in chronic kidney disease and bone metabolism, and the product there is LNP1892. That product is actually showing a great promise in the phase 2 clinical development, and it has undergone and completed in a large number of patients the double-blind study. Let me just, and then we also have open label arms, so that's why I can talk about the study. But let me just elaborate. When I said the chronic kidney disease and bone metabolism, both of them have an underlying pathology of hyperparathyroidism, meaning they're a high level of parathyroid hormone, which is a very important aspect for regulating your kidney function and calcium function, which is essential for your every cellular function, also for bone metabolism. It's an essential component. So for chronic kidney disease, secondary hyperparathyroidism is the underlying pathology, and there is 5 stages, stage 1, 2, 3, 4, 5, and the 5 is end-stage renal disease, which is also complicated with the patients have to go undergo dialysis 3 times a week, so it's very debilitating. So this particular drug has potential to go into non-dialysis segment where worldwide there is no treatment option available today, but also a much superior option for the chronic kidney disease, patients undergoing dialysis, and many of them don't tolerate current drugs. And our drug has shown very high superiority in terms of the safety profile so far, and also is very efficacious. So those are the 2 programs we highlighted in the earlier call.
Well, staying with this pharma sector, the cutthroat pricing in the Indian drug market is keeping Biocon away. Chairperson Kiran Mazumdar-Shaw says the company will look to India at a later stage when the pricing scenario improves. For now, the drug maker is focused on biosimilars portfolio it's building with Mylan. Listen to a conversation she's had earlier with her colleague Yatin Mota.
Biocon and Mylan together have a very rich portfolio which is beginning to deliver in the marketplace, because we have several biosimilars approved and already have entered the European markets and very soon the US markets. And like I said, the kind of products that we have basically brought to bear and got approval for are very high ticket biosimilars, such as pegfilgrastim, such as biosimilar trastuzumab, in the future bevacizumab, and of course the insulin portfolio of glargine, aspart and the like. So I think we have a very large portfolio of opportunities. If you know what's happening in the biosimilars arena, almost $30 billion are up for grabs in the next 5 years. And if you look at the fact that $70 billion of biosimilars are going off patent over the next 10 years, then I think you can see the kind of opportunities we are addressing. And I think we are very well poised, because biosimilars, unlike generics, is a very, very complex sector to play in. It's about understanding the complexities of developing such molecules and basically developing clinical strategies to get them into the market in the most cost-effective way.
Good to know that, ma'am. And as you were mentioning, your partnership with Mylan has really worked well. Moving ahead in 2019, the calendar year, can we see more product launches, more products in the pipeline that you have being launched in similar model?
Well, as you know, we've received European approval both for trastuzumab and pegfilgrastim. And we've already been approved for insulin glargine in Europe. So I think Europe is definitely going to be an important market for us in 2019. And then, of course, we also expect US markets to open up for us in 2019, where we already are in the US market with pegfilgrastim with a pretty good start. Yes, competition will build up, but I think we have an early mover advantage, and I think both Mylan and Biocon are in it for the long haul, and we are there to compete and make sure that we become dominant players in biosimilars in the years ahead.
Okay. And ma'am, when we talk about the domestic business, you have been facing some headwinds. The growth is not as strong as your international operations. So, despite the restructuring efforts that you have initiated, so what can we expect, from Biocon for the domestic business? And do you plan to hive off the domestic business in the future?
I think we will stay with the domestic business, because I think it's important to build a brand in your own home market. But we do not want to play a commoditizing game, and that's where the headwinds are in the country. But I think things will normalize over time, because I think the kind of, competitive environment that there is in this country is simply not sustainable in the long term. I think these companies are playing for the short term. I think they are not looking at global opportunities. And yes, I think their investments for developing assets just for the Indian market is going to be much smaller than what we have for global markets. So we will see how to sort of strategize. At this point in time, we want to basically maximize our returns. So we don't want to compete in a highly discounted market like India for the time being. Maybe the time will come when we will actually decide how we want to play better in this market. But for the time being, we will stay in this market because we know we have a very good product pipeline. We know that in the Indian market will start appreciating our pipeline in the coming years, and we will, develop and build on this market opportunity in a very judicious way. I don't think we want to play a bloodbath game in the Indian market for now.
Okay. Well, and continuing with pharma news, with the healthcare news, if you will, the news flashes on your screen a scheme of amalgamation wherein there is a demerger of the making, holding and nurturing investments in allied health and associated activities, underlying investment in the Bupa Healthcare and Antara Living will be a demerged undertaking. The demerger of the healthcare business of Radiant Life into Max Healthcare, and the ratios on your screen as well. Yes, all of this will be subject to approvals from the statutory authorities, of course. But I think in a nutshell, there could be a couple of companies that will be formed and shareholders would get equal shares in both of those names. Remember, in September 2018, this is what happened. Life Healthcare sold about 49.7% stake to Radiant Hospital, backed by KKR. That was done at about 80 rupees a share. I don't think the prices have moved too much, and I think the press release in today's session also says that Radiant Life has entered into a share purchase agreement for that said 49.7% stake from Life Healthcare as well. So all of that's happened, and Max India, the stock, for now, lying absolutely flat. At some point of time, we'll try and get the managements to see what happens going ahead as well. But for now, the stocks are lying absolutely flat for themselves. Okay. The markets too, actually not lying flat, sorry, a bit of a correction that is coming. So we were flattish, now we've just come off a little bit in the last few minutes of trade. Let's get in our technical experts on board to try and talk about what to do in a scenario like this. Hemen Kapadia of KRChoksey Securities with us on the show, as is Sumeet Bagadia of Choice Broking. Gentlemen, both of you, good afternoon. Thanks much for joining in. Hemen, how are you approaching trade this afternoon? We're down about 0.5%, 10,700. What do you do now?
Very good afternoon to you, Neeraj. We run up, there was huge OI at 11, I think, when I spoke to Agam last Monday. I didn't think 11 would have been taken out in a hurry. It wasn't, and it didn't. Interestingly, Neeraj, last Friday, I think the OI at the 11,000 call was varying around 48.50, went down to 41.52. But last Friday, suddenly it went to 61. Post-closing, it settled at 58. Excuse me. We currently at 61. I know it's far away, but I think that huge call writing at 10, 9 and 11,000 suggested that this, okay, we don't have much left, there's a holiday, just 2 trading sessions, but so those levels are sacrosanct, this settlement. We are not coming to 11,000, or even if we do bounce back, 11,000 will not be conquered this settlement. I know it's not a big deal, but even then. So I think it's very clear that we are heading towards 10,550 or 10,500, but once again, significant OI at 10.5, so we remain in the range. Closer to 10.5, I think we'll see some short covering coming up and we'll see a bounce back. So frankly speaking, we've gone into a stagnation mode, and we spoke about it, Neeraj. I've been bearish on the Dow Jones on Bloomberg Quint for the last 2 months, not very surprising. So it's taking its toll.
Of course, the Nasdaq has already slipped into a technical bear market zone, considering it's lost out about 20% from the top. But Sumeet, good afternoon to you as well. Are you also of the opinion, are we expecting some range-bound movements for the Nifty for the time being?
Hi, good afternoon. Well, yes, absolutely right. There is a possibility that we might see some range-bound move in index. As far as levels are concerned, it has immediately broken the levels of 10,700. So there is a possibility that we might see some more downside till 10,670, 10,680 levels. As far as a trend or a trade is concerned, I think one should initiate long positions once if the Nifty is able to break 10,750 on higher side. A breakout about 10,750 will take index to 10,800, 10,850 levels. So a fresh buy should be initiated only above 10,750 levels. If 10,750 levels are taken away, then the stop loss should be placed below 10,700 levels for the targets of 10,800 and 10,850 levels. So this is purely a conditional call on buy side. At present, it seems that the index can touch levels of around 10,670, 10,680 levels, and if these levels are taken away, then we will see extended sell-off till 10,620, 10,600 levels also.
Right. So, Hemen, just a continuation of what you said. You're selling a strangle currently on the Nifty.
Yeah.
Can you take us through that?
Yeah. I am selling the 11,000 call and the 10,500 put, but I'm not selling for this one because the premiums have been almost wiped out. Agam.
Yes.
But the call is not for the whole month.
Yeah. Okay.
I'm selling it just for a few days, ideally Thursday or max Friday. I would not want to keep this call open beyond Thursday because I think closer to 10,550 if it goes there. There's 10,665, 10,610, but closer to 10,550, I think we'll see some covering.
Okay.
So it's a call for the next series, but for three or four trading sessions, I'm selling a strangle.
Okay, fair enough. That makes sense. Let's take a look at the stocks then. And Sumeet, I'm going to come back to you on stocks. What ones are you trading on towards the long or the short side?
Well, I have two stocks for the day. Both are on buy side. The first one is BHEL. BHEL looks good to me. It has given a good move today, and from here on there is a possibility that we might see an extended move in which we can see levels of around 78 or 80 in next couple of days. Those who have taken long positions in BHEL, they can hold on the existing long positions. A fresh longs can be initiated at current market price, or if there is a dip of around 1 rupees from present levels, then that should be used as a buying opportunity. Downside, it has support at around 69 levels, so that should be the stop loss for long positions for the upside target of 75 and then 78 levels. The second stock for the day is from banking space, and that is Kotak Bank. Kotak Bank is showing some range-bound movement from last couple of days. In fact, from last 5 days, it has resistance at around 1240, 1245 levels. Once the stock is able to break the resistance levels, we will see a move till 1270 or 1300 levels in next couple of days. I think those who have taken long positions in Kotak Bank, they can hold on the existing long positions. One can initiate fresh long positions at the current market price with a strict stop loss to be placed at 1210 on lower side for the upside target of 1270 and then 1300 levels.
Some interesting stocks which have fallen, and we'll talk to our fundamental expert in moments from now as well about those. But look at SRF, 7.5% lower. More liquid Jubilant Foodworks, which is down about 7% and trading at the low point of the day. And today Avenue Supermarts has fallen about 5% as well, 1,567 and counting. So in addition to the two-wheeler stocks which have come off quite a bit, these are interesting mid-caps which are well-owned, well-traded, and in today's session correcting quite strongly as well. 7% apiece for SRF as well as Jubilant. Nothing to scoff at. Even maybe a quick thought before we get in Sanjiv, Bhasin, on either a SRF or a Jubilant Foodworks.
I think Jubilant Food, okay, this data is going to be a bit skewed, Neeraj, because we are in last couple of days, so I'm not sure how much to rely, but whatever data we have, we're seeing a 21.5% OI addition, which is a short position as far as Jubilant Foodworks is concerned. I think that is reflected in the price, so I'm not sure if it's worth acting. It's a bit too late in the day, but the bounce which was on from 1170 to 1370, I think seems to have come to an end. There's negative divergence. Stock made a higher high, MA series made a lower top, and today, assuming it closes at this level, it will give a crossover sell. So frankly speaking, the fizz is out. I think the bounce is over, so it doesn't look good.
Right. Hemen, take us through Reliance Capital and Marico as well. I believe one of them is a buy, the other one is a sell.
Yeah. Frankly speaking, I thought everything should be a sell, but closer to 10, 5, 550s, that will be, normally there should be some covering. So, Agam, as far as Reliance Capital is concerned, we've been flat for around 7 trading sessions. The oscillators on the weekly charts have turned positive. It's set for a recovery and not a rally, but I don't think it's going to perform in a market like this, but nevertheless. Buy at around, I'll have to tweak the figures a bit because it's already come down. So buy at 215, stop loss 210, target 225. And secondly, I have a sell call on Marico. In fact, I have a positional sell call on Hindustan Unilever also. I think that has gone for a toss. I don't think these highs are coming in for the next month at least. So Marico is entered a corrective phase, and we have support at 370. So it's a conditional call at around 375, stop loss 380, target 365. But it's a positional sell, and I think it's going to take some time. And from digressing just a bit, I think Hindustan Unilever has formed a rounding top or so, and we formed a shorter term peak. This high that we saw last week, 1870 odd, in coming till Jan end at least.
Wow. Some weaknesses for sure. Let's get in our fundamental expert on board as well, Sanjiv Bhasin of IIFL joins us right now on the show with his thoughts. Sanjiv, good having you. Thanks so much for joining in. Season's greetings to you and your team at IIFL. As we speak, the markets worsened a bit. We were surprised in the morning that it didn't crack too much, but now it's been 3 days when we've fallen. The world markets are in a bit of a tizzy as well. Do you reckon that this pullback, in light of what's happening in the globe as well, could last for a bit longer?
Yeah, hi. So I think it's more to do with expiry related pressure, plus people, we were outperforming. So I think there is a bout of profit booking locally also. And even though foreigners have been relatively more sanguine on the Indian market, I think it's a regular bout of profit taking stroke volatility. I think global markets are about to turn for the better. Most of the weakness due to President Trump and some of the other, oscillators because of energy are definitely playing out on the negative side in most European and in the US. But for India, it's a sweet spot, and I think it's just about a volatility. I continue to think that first week of January we should be headed higher, and we have already been saying 11,000 to 11,200 could be on the cards in the first fortnight of January. We think this is again an opportunity to buy. Globally also, we think most of the pessimism and weakness may be overdone. We are due for a bout of short covering stroke value buying, where you could see maybe the Dow trend about 1,000 points higher.
Right, Sanjiv, please come in on the two-wheeler space. In this case, specifically Hero MotoCorp. What's really happened is we've had one broking house come in and downgrade the stock, and after that we've seen the stock under pressure. They are suggesting some headwinds, at least in the near term. How are you viewing Hero MotoCorp in terms of investment at this point in time, considering that 4 or 5% decline today? Would you consider this as an opportunity to buy?
No, we have a better rating on a buy on Bajaj Auto and TVS Motor. We think those are going to give you more run for the buck. Bajaj Auto, because of its export oriented and doing extremely well in the subcontinent, aside from the new launch which is eating into the market share of Eicher. But like I said, Bajaj Auto for us and TVS Motor. We are also like Eicher Motor at these prices. We think these three can be relative outperformers. So ignore the rhetoric for this month and so on. We think that in the next 3 to 6 months, you should see much better times for all these three stocks. Hero Motor will be a market performer. It has been a relative outperform on the price front, but we think margins are going to be hurt in this quarter.
Sanjiv, the other study we were running in Bloomberg Quint here is how expensive some of these FMCG names are, specifically something like an HUL or for that matter Dabur or Marico. And what's really happened is, if I'm looking at the consensus numbers, they all suggest an upside of no more than 1-2% from current market levels, and a lot of other analysts on the street are saying that at this point in time, valuations on these companies look slightly heady. So based on that, how would you view stocks and investment in there? Would you also wait for a little correction before you delve into it?
Yeah, that's what they've been saying from 1,200 rupee on HUL, and it's only been getting stronger. So we have 3 coverage and 3 stocks. Dabur at 360. Nestle has been one of our top picks from this decline in 10,400. And the third would be ITC. I think ITC is giving you all corrections to be bought into. Valuations are very, very comforting. On lever, it's a market performer. The more you try and bring it down, the more it will rally. I don't see it, coming below 1,600 on any, even on a weekday. So it will continue to remain an expensive stock, which will continue to, be always chased by most mutual funds, both domestic and local. But for us, it will be Dabur, like I said, at 360, 365 was the opportunity. Same with Nestle, and ITC would be our top pick over here.
Sanjiv, what should somebody who's gotten into the IPO in Avenue Supermarts do now The stock is coming off a little bit, but you know, every dip in that one, because of the row free float as well, gets bought into quite heavily. So it's corrected now for the last couple of days. There's no saying when it turns around. For a long-term holder, should he worry? Should he tactically get out of it because it's expensive, or should he stay put?
Like I said, Neeraj, even lever has been expensive all the way from 1200 rupees. It's only made new highs. Same as with Avenue. I think all corrections are bought into. The theme, the business is doing extremely well. It's a well-run machine, and you know, I know that the valuations have been stretched, but it's a glass half full, half empty. If you can, you could book some partial profit, get into, you know, other sectors, other stocks. We think the high betas are going to definitely outperform. So you know, you're seeing metals hit almost a 3-4 month low. I think steel stocks are going to do extremely well in the next 3 to 4 months. And if I could put my money on JSW and Tata Steel at these prices. 290 on JSW and 515 on Tata Steel. I think you could make 20% in the next 6 months.
Okay, let's pull up SRF, because let's address that technically as well. Perhaps Sumeet could help us here with the levels to keep an eye on. Of course, there's been 2 straight days of very, very sharp drops in SRF, so something's gone fundamentally wrong here. But Sumeet, come in on SRF on a technical level, and there has been a surge, a substantial surge in volumes in today's day of trade, particularly where, well, of course, selling pressure has intensified. What levels would you be watching out for in the near term when you're dealing with SRF? That's one. And secondly, would you initiate fresh shorts in SRF at this point?
SRF has given a breakdown. It has broken the immediate supports of 2000 levels, and now it's trading below the supports level. It's trading below the support levels. There is a possibility that we might see extended move till 1950 or even till 1900 levels. It's better to avoid long positions in SRF. Those who have taken short positions, they can hold on their positions with a trailing stop losses to be placed above 2020 levels for the downside target of 1950 and then 1900 levels. If the stock is not able to hold the levels of 1900, then we can see an extended move till 1850 also. It's better to avoid long positions in SRF. Stock has given a sharp sell-off today. Candle is bearish. Looking at the candle, it seems that the downside move will continue for next couple of days. So the immediate target should be 1950 and 1900 levels for SRF.
You know, it's interesting. I'm just trying to think what could have gone. There's nothing in the news flow that seems to suggest that. At the end of Q2 as well, the specialty chemical guidance seemed okay. So there was nothing too dramatic there, but certainly something's gone wrong, because the stocks come off quite rapidly in the session today. So some pressure points. The question mark only is, will this last, or will this get bought into? I think Vinati Organics, Aarti Industries, etc. have done reasonably well for themselves. So nothing wrong in that pocket, and those stocks continue to. And today's session, Vinati may have come off, but I think those stocks are still doing okay. The SRF has come off compared to the other two in quite a meaningful way in trade. But yeah, specialty chemicals do look like they are under a bit of pressure in the session today. Let's wait and watch if this lasts. Sanjiv, Bhasin, any thoughts here? They've kind of gone out of the ranges of discussions, but an SRF in particular, and if you don't track an SRF, then any of the other larger specialty chemical companies.
No, I track all three, SRF, Atul and Aarti Industries. We think all three are to be bought. We think China is going to rebound very, very sharply. There is a talk of infusion of capital. You'll see that maybe next week or in this week, in the later half or second week after the holidays. I think metals are due for a strong rebound. Specialty chemicals, again, there is a demand-supply shortage, and this could be routine profit booking. But if you have to be in this, then SRF, Atul and Aarti are three stocks which are very, very doing extremely well on the balance sheet side, and I think these are all opportunities to buy. Now, obviously, 7-8% on a routine stock in a specialty chemical because of the depth generally does signal weakness, but I think these are huge outperformers in the last 3 years, and I see no reason why they will not do that in 2019. So we have a coverage on SRF, Atul and Aarti Industries.
Okay, Hemen, I wanted to come in on JSW Steel as well. Now, it's seen a correction of around 4.5–5% today, but its correction is a lot steeper as compared to some of its other peers like Tata Steel, perhaps. What's going on here? It's currently at around 293. What's the short-term outlook here?
Agam, the bounce hasn't sustained. We are in an intermediate uptrend. We probably have been, Agam, since the weekend at 21st September when we peaked at 427.5. And frankly speaking, if I look at the longer term charts, Agam, the move which started in December 2015, that's almost quarter to 3 years or so, Agam, seems to have exhausted itself at 427 in September. So, you know, almost 3 years or so. And we walked into a correction of a greater degree. So, this bounce should have taken it past 315. And then we would have seen something more on the upside, but evidently that's not happened. So now it's going back to test its intermediate low of 286. We're not very far away. And if that cracks, I think we could lose another 20–25 points from there. Okay, once again, we have just a couple of days, but huge OI addition, Agam. Once again, I'm not sure how much the validity is going to be for 3 trading sessions, but 31% OI addition intraday. I'm not sure it will remain like this till the end of the day. If that is the case and it's a short position, it was weak, is weak, and this is just adding to the weakness.
Okay. There's sustained weakness in systemic one as well, in graphite as well as HEG, and both of them are declining in trade today. Well, HEG is down around 5%, over 5% actually, at 3,691, and graphite is at 756. That is also down 4.7%. Sumeet, can you come in on one or perhaps even both of them? How are you reading cues here for HEG as well as graphite? What's going on, and what levels would you be watching out for?
See, HEG has given a breakdown. It's quoting the 3690, and it's the 200 DMA for this stock comes at around 3630 levels. Today it has tested the support levels of 200 DMA. If the stock is able to break the support levels, then there is a possibility that we might see extended sell-off till 3250 or 3300 levels. Better to avoid fresh long positions in HEG. As far as your question on graphite is concerned, it has also given a breakdown. It has broken the recent lows. Today's closing below 770–760 levels will take stock prices to 700 or 710 levels in next couple of days. It's better to avoid long positions in graphite also.
Sanjiv, just one final question on the tire stocks as well. Today they are seeing a little bit of pressure, of course, but that's largely because there is a correction in the markets. We have seen the likes of CEAT and MRF come off to a certain extent, but there is also a tailwind that's playing out in favor of these stocks in crude-linked input costs. What is your view on the tire stocks, and which one of these is best placed to give higher returns here?
Yeah, so I think the tailwinds far outnumber the headwinds, which was not much expected because of the government. It will come in the next tranche. But look at SBT rubber prices. I think they're hitting 4-month lows, and we think autos are going to rebound very smartly before the elections, before the budget. So you see a lot of pre-budget buying in a lot of autos because of the concessions, and we think tire stocks are going to do extremely well. So you know, all three, MRF in that order, MRF, Apollo Tyre and CEAT, we think all three merit a buy with a 20% upside in the next 6 months.
Okay, Sanjiv, we'll leave it at that. Thank you so much for joining us and taking us through your views on the markets as well as a whole host of stocks that we've discussed here. Of course, we're keeping an eye on well, some of the consumption names that we've spoken about in staples as well as discretionary. But, you know, let's get in just perhaps one more, well, should I say, technical check here, and I want to address Edelweiss as well. And Edelweiss has seen a little bit of a rise in the recent few days, but today it's again reeling under pressure. It's currently at 184. Hemen, how are you seeing trade here?
Dead cat bounce won't sustain. We are going to 130 and probably 110 in the next 6 months. It might take some time, but it's bad. It's going to go down more.
Right, and let's pull up Havells India as well. Now, this one again is one of the preferred picks when it comes to consumer durables. It's down around 3.3%. Sumeet, can you come in on Havells India? It's currently at 668. What would you do with this?
The index is not taking the support level, not holding the support levels, and it is showing a one-way downside move. Looking at these stocks, same way these stocks are moving. As far as your question on Havels is concerned, Havels has is looking weak on charts. Immediately there is a possibility that we might see a fall in the counter till 650, 660 levels. If the stock is able to break the support levels of 650, then there is a possibility that we might see extended sell-off in the counter. Those who have taken sell positions at higher levels, they can hold on the existing positions with the trailing stop losses to be placed at around 685 levels on higher side for the downside target of 660 and 650 levels in next couple of days.
Okay. Well, we've spoken about a lot of losers today. How about some gainers? Would you go out and buy any of the large cap IT names at this moment? We may have spoken about it in the past, but Wipro, TCS, Infosys, at least Wipro and TCS seem to be adding on to the gains in today's session. Would you trade them?
Wipro is, like you mentioned, Neeraj, surprisingly resilient. Is it because it's not very liquid and the promoter has so much stock? Maybe. But relative strength coming in. But coming back to your main question, will you go long? No, I don't think so. Because the daily MACD signal to sell. If you're talking about TCS, Neeraj, similar view. Yes, but what you say makes a lot of sense. At least the hourly charts are seeming to suggest some sort of a revival in some of these IT stocks, and the hourly mechanical indicators are showing a bounce, but it would be too few, too little. So I'm not sure if it's worth a long trade, but it's definitely not a short neither. Absolutely right.
Okay, well, on that note, we slip into a small break, but on the other side, we do have the Fab 4 stocks of the day as well as the dealing room check. So don't go anywhere and stay tuned in.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
Or maybe they'll lay the foundation for something new? I hope my ideas survive.
I've had some great ones.
And there's still
so much left to do.
Who knows what life will bring?
The road is long.
The journey full of promise.
The pursuit
only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Okay, back with Countdown right here on Bloomberg Quint. 30 minutes left for the markets to shut shop. I just want to bring up the global picture as well and what's happening across the world in today's session. And there's a tick of red for the CAC and the FTSE at least, if not the DAX, and the Dow futures marginally in the green. But there's nothing untoward that's happened in Indian markets per se. Crude prices haven't really gone up too dramatically, so they've stayed stable and steady. Brent crude, that is 54 or thereabouts, so nothing untoward happening out there too. I think the factor probably to mind is, and it's a chart that we had shown in the morning today on the trade setup about how the Nifty versus the S&P 500, there has been a bout of significant outperformance simply because the Nifty hasn't cracked as much as the S&P 500 has since November. And at some point of time, with the US markets doing what they're doing, there will be a bit of a catch-up that the index would have to play. I would reckon that part of that reason could be that. Sanjiv, Bhasin, of course, mentioned that there could be expiry-related pressures as well. But I would guess that the global market headwinds and the way the global markets have cracked so much, at some point of time, you have to give credence to the fact that the world markets are not in a good shape, and therefore our markets too could fall. 10,673 for now, looking slightly wobbly. A few heavyweights too correcting. Had it not been for IT holding out, we could have been in a much worse shape. We'll talk about all of that too, but before we do that, let's figure out what's made it to Yash Upadia's list of the Fab 4 stocks of the day. He joins in right now with that. Yash, good afternoon.
Good afternoon, Neeraj. I will start with BHEL first, and that one's up about 3.5–4% in today's day of trade on the back of reports that the company is in talks with a US-based firm to enter into a joint venture for the manufacturing of lithium-ion batteries. So that one's up about 2.5%. Inox Leisure is holding on to gains for a 3% uptick there after the GST Council meet reduced the rates on tickets are worth less than 100 rupees from 18% to 22%, and consequently they reduced the rates on tickets priced above 100 rupees from 28% to 18%. GE Power is also up 2.5% today after the company announced that its consortium has received a big order for a hydropower plant in Malaysia. The order for the company is worth close to 700 crore rupees, so watch out for that. And I want to highlight Engineers India over here. It's up only 2.5% today on the back of heavy volumes, but it has been moving for the last week or so, and it has gained close to 9%. So watch out for Engineers India. Back to you.
Yes, thanks for joining us and getting us those Fab 4 stocks of the day. But time to look for buys across sectors, says Sanjay Dutt of Quantum Securities. And in a conversation that he's had earlier today with Bloomberg Quint, he said that Indian markets are presenting one of the rare occasions in over 3 years to make portfolio changes, especially as we head into the election season. This is what he's saying. Listen in.
One of the very rare occasions in the Indian markets over the last, 24 months or maybe 3 years, where we actually have, opportunities available across sectors. So we don't necessarily need to focus on themes. Whether you look at large cap, mid caps, or whether you look at it from a, sectoral point of view, you will find good companies to get into, conviction buys to get into in the consumption space, in the infrastructure space, in the capital goods space. The markets are, I think very well positioned at this point of time. We've had a good amount of leverage that's gone out of the system or is really being ironed out completely. We've got, a situation where last 3 to 5 years we've had no substantial or no capacity at all coming up in the core industries, which suck up a lot of capital, and then idle capacities cause problem in the economy. So therefore, in this, to cut a long story short, I think a bottom-up approach and not being sector specific, but finding good buys across sectors, building a good portfolio, this is the right time to start doing it. Because we're running into the election season, and invariably post-elections things settle down. And this time more so because we are seeing, the biggest problem that India faced in the last 5 to 7 years of, highly leveraged balance sheets and a overall slowdown. That is kind of now getting over towards the end of it. So I think we are very well positioned to encash opportunities right now to start making our shopping list and slowly dibbling in and adding on every dips like what we had on Friday.
Okay, interesting. Sanjay, I know I said that we won't venture into too many sectoral details, but a couple of spaces that we didn't discuss, and again, things have changed in the last 15 odd days since we last spoke. pharma. And the reason I bring this up is, two or three, but the principal reason, I hear a lot of your brethren speak about how Indian exports to China, API exports to China, have now started moving up. They didn't get approval for a reasonably long period of time. Now that companies like Divi's, for example, have gotten the first approval, the next approvals are coming at a fast pace. I think India has made a representation to China as well to lower duties, reduce competition, so on and so forth, etc. Multiple things that India wants China to do in order to create that as a large market as well, because it is also to China's benefit. Do you play this theme at all? Could China as a market become what the US was 15 years ago?
It's too early to say whether China would become a market like the US, because China has got its own set of problems, or own set of challenges in doing business there, foreign companies. But I can say one thing, that the trade axis that was tilted towards or was completely aligned towards the Western world, that's US or Europe, has now balancing out and tilting towards other parts of the world, which includes China majorly, because China is a big market. Indian companies have started to look at the Far East, and not only China, but across the entire Pacific Rim, and other opportunities here. Whether you see the trade with Korea that's going up, or trade with a lot of other countries that's going up. China, yes, is a big opportunity, and there has been a conscious shift that has been made by the current government, and we can make out from the kind of meetings Prime Minister Modi has had with Chinese leaders, and the fact that China.
Well, so big opportunity for Indian healthcare in China, well, opportunity in India as well on the healthcare and the hospital space. Some announcements that have come out from Max India and Radiant Life. Joining us on the show to talk about those is Mr. Abb-Vie, the chairman of Radiant Life. Abb-Vie, good having you. Thanks so much for joining in. Can I just ask, can I start off the interaction with asking about how did you arrive at this ratio? Because as I understand, the healthcare businesses stay, the non-healthcare businesses get separated, and if I'm not wrong, two separate businesses will get listed, and the current shareholders will get shares in both the businesses, right?
That's correct, as far as that.
Okay, so how did you come at these ratios, and what are the timelines that you're looking for?
So, with respect to the timelines, it's at 8 to 10 months, 12 months timeline. Because the acquisition is necessarily a combination of cash and stock. We had earlier previously made a binding offer to acquire 49.7% from Life South Africa. Subsequent to that, what we will take, MIL will be companies. One is the healthcare business. The other would contain.
Okay. We have Mr. Soy on a slightly patchy line, but we'll just try and still get the updates there. I think, Abb, if you can hear me, I heard you mention that you are looking at 8 to 10 months of a timeline. What happens next? There is a healthcare vertical which, okay, I think we've just lost that line, a very patchy line. Now we'll try and reconnect that conversation, that phone line as well, and get a sense of what would this mean for the existing shareholders. Darshan, I think, has studied this closely. Let's just get that quick perspective. Darshan,
yeah, so basically, see, what is going to happen, it's a series of transactions. Firstly, what will happen is that Radiant Life and KKR together will acquire a 49.7% stake in Max Healthcare. Now, Max Healthcare is a part of Max India, which is listed. Then what will happen at a simultaneous level, Max India will demerge. So Max India has the hospital business, and they have the allied businesses, which is insurance and the allied activity. They have Antara Senior Living, they have the Max Pupa stake. That will be spun off into a separate company. Post this, these two things happening, what will happen is that Radiant on its part will demerge its own hospital business and merge it with Max India's hospital business. So now you have two businesses. What Radiant will be interested in, will be part of, will be the hospital business which will be listed. They have nothing to do with the business that is spun off. What will happen is that for every 5 shares that you hold in Max India, you will get shares of the new entity, which is
two.
One.
1 share.
5 for 1.
One share of the new healthcare entity for 5 shares that you held.
No. If you hold 5 shares on Max India,
right,
you will get 1 share of the new entity, the allied business.
The healthcare business.
Yeah. So basically, what will happen is Max India then will become Max Healthcare because everything is moving. So right now, if you have 5 shares of Max India, you get 1 share of the allied business that will come in. So in short, once that is spun off, so 5 shares of Max Healthcare, yes, Radiant combined, will have 1 share of the allied business.
Okay, I think we have Mr. Soy back on the line. So, Mr. Soy, the presumption is that you'd be interested in this healthcare business as well. Tell us more about what the combined entity looks like so that a shareholder of Max India currently knows what is he getting.
So essentially, we are only, as far as Radiant is concerned, we are only looking at the healthcare business. We will not have any interest in the other businesses of Max India Limited. They will continue post-merger, demerger to be owned by the present shareholders of India Limited. Now, the combined entity essentially should then be, third largest healthcare company in India in terms of revenues. We believe it's going to be the 4th largest in terms of number of beds, and with a large concentration in metros, both in NCR, which is perhaps amongst the most attractive micro markets, as well as Mumbai, which is perhaps the second most attractive micro market.
Abb-Vie, hi, this is Darshan here. Just a clarification. So what we are understanding is that Max India will first demerge. You will take a stake of 49.7% stake in Max Healthcare. At the same time, Max India will demerge the allied and the insurance businesses, and then you will demerge your healthcare business and combine it with Max Healthcare. Is that something? Is this? Are we getting this right?
That's correct. And Max India Limited, which is the listed company,
yes,
post demerger, which is going to be holding the healthcare business, will also merge into Max Healthcare. So essentially, through a 3-way merger, it becomes a listed company.
So basically see, now there will be 2 listed companies. One of them will be the Max Radiant Healthcare combined, and the second one will be the the allied business and the insurance. So once the demerger happens, the one that will remain listed first, will that be Max, will that be the allied business, or will it be Max the healthcare business?
I believe both will be listed.
So both will be listed at the same time. So once this demerger goes through, both will, because one will, if I'm not getting it wrong, one will be first the demerged entity will be there. The insurance business will be taken out, and that pretty much will be listed at a later stage. So there was a little bit of confusion on that. So how will this listing process take place?
So it's a composite scheme for merger and demerger, which will be filed with the NCLT. And subsequent to that, Max India will demerge into 2 companies, one of which will merge with its subsidiary, and Radiant will also post demerger merge into the same subsidiary, which is the health.
Okay. Abb-Vie, what would the... Sorry, so I'm guessing what you're saying is that both the entities will, whenever the listing happens, will be listed at almost the same time?
Now, same time, that's correct.
Okay. What's the aim for the healthcare? Because I heard you mention that you are interested in the healthcare business. What's the aim to grow the healthcare business over the course of the next couple of years? Because you're the 3rd largest, 4th largest in different aspects. What happens next?
So largely we are metro-centric here, and with large presence in North India. That is what we will be growing. We will be essentially, focusing on clinical outcomes. We will be focusing on augmenting specialities, efficiencies, improving margins, and increasing our footprint.
What's the shareholding going to look like on the Max Radiant Healthcare joint combined post this entire scheme of arrangement?
So post the entire scheme of arrangement and conclusion of all the transactions, which includes TKR purchase of 4.99% from the present promoters of Max India Limited, the ensuing entity will, I will be the promoter of the ensuing entity with a 23.2% stake. KKR will be co-promoters with a 51.9% stake, and subsequently through a process of declassification. Max India, present Max promoters would be stepping down as promoters, and they will have but continue with a 7% stake.
What's the financials of the combined healthcare entity? How will that look? And what's the debt on the books that will happen once? How much debt will the combined entity have?
So, I will give you specific guidance later, but in terms of revenue, it should be about a 3,500 crore.
And with what operating margins?
Again, I would like to give you the guidance later.
Okay, but I just have one final question. If I'm not wrong, and please correct me if I'm wrong, but I think there is a 4.95% stake that Analjit Singh would be selling in this combined healthcare vertical as well. Is that true?
Subsequent to the listing.
Subsequent to the listing. But is the price being decided upfront, or will it happen whenever the listing happens?
The price is decided upfront. It's the same price as which the listing.
Which is how much has this? What price has this been done?
This is the same price we are acquiring Life South Africa, which is at 80 rupees a share.
80 rupees a share. Okay. Fair call. Abhay, really appreciate you taking the time out and giving us that quick perspective. Thanks so much.
Thank you.
Well, a bit of a complicated deal at the start, but if you go into it, I think some clarity coming in. A story about this will be up on the site as well very soon for anybody interested, a Max India shareholder interested. You can log on to the website at some point of time later on and try and get it. I don't know if the market was believing that there will be a better ratio or otherwise, but for now, the stocks come off and it's around the price at which the deal has happened. So watch out for this one. As also watch out for the markets which are trading soft, about 92 points lower in trade. So while we've discussed a lot about Max and other aspects and got some ideas, it's also important to take stock of what dealing rooms are recommending in the session today. And Yatin is here with his channel checks. Yatin, good afternoon. What are you learning?
Afternoon, Neeraj, and for the past 2-3 trading sessions, the activity is quite dull in the dealing rooms. In fact, today also the kind of correction that we have seen, the broader market correction is much deeper. And probably, a lot of stocks like, SRF, a couple of these, mid-cap stocks have been correcting quite sharply. But starting with Aurobindo Pharma, and despite getting approval from Unit 4, the stock is down almost 0.5% from the day's high. And dealers do indicate, that domestic funds are sellers as far as Aurobindo is concerned. Fresh delivery-based selling is seen as far as discount is concerned. I was talking about SRF as well. And domestic funds, again, are sellers in this name. We have seen a lot of fund activity in SRF, and this is the kind of fall, almost 9% down for this particular stock. As far as the final dealing room recommendation is concerned, on the buying side, it's Federal Bank, and dealers are indicating at this point in time that based on F&O trends, it can be a good buy today, sell tomorrow kind of a strategy which can be applied on the stock. So Federal Bank is the only recommendation on the buying list as far as the dealing rooms are concerned today.
Right, Yatin, thank you so much for joining us and taking us through what the dealing rooms are suggesting right now. But let's get in on the fundamental voice here. We have Mr. T.S. Hariyar of HRBV's Client Solutions joining us in the studio right now. Mr. Hariyar, hi, good afternoon, and thank you so much for taking the time out. What are you making of these market moves? Is this something of a worry, or do you think this is just a part of your near-term consolidation that you're seeing?
No, I think the Indian markets seem to have faced some resistance at 11,000 Nifty. I think that has proved to be a kind of a short-term resistance. And also there are worries in the United States. Look at the NASDAQ, look at the Dow. I think we have been losing tremendous value over the last few months. In fact, I was just checking that some of the FANG stocks, which are the IT stocks of NASDAQ, they've lost between 25 to 30% since their peaks. So I think the correction in the US has been quite sharp. And I've been talking about this inversion of the yield curve in the US for quite some time. Right. And I think that is beginning to show gradually. I don't think the market has enough steam to take it beyond 11. So that probably explains why this correction. I think it's largely a reaction to the US markets.
Can it last, though, is the question, and I think it's very difficult to answer that. We'll talk more about that as well, but we are very close to 320. Actually, it's 320 now, so it's good time to first get in some closing strategies for our viewers who want to trade. Sumeet, I'll start off with you. Your top closing strategy.
The entertainment is looking weak. It has given a breakdown. There is a possibility that we might see a fall till 425, 418 levels. So it's better to be on sell side. It's an STBT call. Sells the entertainment at 436, 438 levels with a stop loss to be placed at 445 on higher side. 445 should be the stop loss for the downside target of 425 and 418 levels.
Okay, and Hemen, how about you?
I have a BTST on Apollo Hospitals.
All right, so, well, you buy Apollo Hospitals today and with a possibility that you can sell tomorrow on a profit. Of course, it is looking, well, one of the stocks which is bucking the trend up as much as 2%. But let's stay with some of these big movers. And Mr. Harrier, I don't know if you've been following the story on Max India and the demerger right now. What have you made of this? What does it mean for Max India, and what would you do with the stock?
See, I think there are two things. If you recollect, there's a certain history to Max. At one point in time, Max was going to merge with HDFC Life and get the insurance business together. That didn't go through largely because IRDA didn't permit a merger of an insurance company with another company which also had other businesses. In my view, I think this demerger of the health business is probably a first step towards an eventual merger of the Max insurance business with probably HDFC Life. I don't know whoever is the suitor. From that perspective, I think it's a very good method because obviously I think there is only so much space left in the insurance space. You don't have a space for 10 large players, so probably there will be some consolidation. And Max, has a very good franchise, so probably they get together HDFC. IRDA won't permit them till the healthcare business is hived off. So I think this is probably a step towards that. And I think if you look at the healthcare business, I think Max seems to be one of the leading players apart from Apollo and the others. Probably it doesn't have too many problems like Fortis, but I think from that perspective, I would believe it's just a first step towards hiving of the insurance business eventually.
Hari, if you are owning a Hero and a Bajaj Auto, would you continue to own them, or would you switch them, or would you just get them out and stay on the sidelines with the money that you have because the markets are looking jittery? All three options.
I wouldn't worry so much if I had a Hero or a Bajaj. I would probably worry a bit more if I had a TVS, where I'm a little concerned about valuations, or any of the other auto stocks, like probably a Tata Motors, not exactly about Maruti, where I still think there are some froth as far as valuations are concerned.
But you're fine holding a Hero?
I'm fine holding both Hero and Bajaj. I don't have a problem.
Okay, fair call. So two-wheelers not a problem. What about Z Entertainment? That call from Sumeet on Z got me thinking. 2.5% for a stock that's already corrected quite a bit.
We have been long-term negative on Z, and I think the very fact that the company has not been able to adapt to the changes on the the media front, I think it's very clear that the company is now trying to sell out a large stake. I think what has happened over the last 20 years is that Z has probably tried to become something for everybody, and it has ended up becoming nothing for anybody. So I think that is probably the biggest problem that Z is facing. And unlike a Sun, which is probably more of a focused play in the south, you have a pan-India presence, but if you ask somebody what is Z, it's very hard to define what it is. So I think that is probably the big problem. And going ahead, I think the kind of investments that they've made on DTH and on the media business, I don't think that is really going to pay off the way they were originally expecting. So that is probably the reason why I think Mr. Goyal, being a very smart promoter, is trying to exit partially. But we are very, very negative on the stock. I think it should go well below 400 is our estimate.
Okay, just a second before we move any further, I just wanted to mark Avenue Supermarts is now down 7%, 1533, and that's trading at the lower point of the day. SRF is down 9%, 1961 and counting, and the volumes substantially higher. The AVAT will show you that volumes on both SRF and Avenue Supermarts in particular much higher than what the 20-day average volumes are.
Well, actually, considering we were talking about a whole host of some of these ideas, I also want to take a look at Motherson Sumi. And, Mr. Harrier, we've been talking about this one from time to time. And at this point, it seems there are certainly some global problems. Does that mean that Motherson Sumi will also see a little more correction from current levels? Would you be cautious on this one?
We are cautious in the ancillary space because the truck data coming in from the US is not great. That was evident on Bharat Forge. Similarly, I think European auto sales have not been picking up. China has been seeing a clear slowdown, which is why JLR is shutting down its operations regularly. So I would believe that there is a global concern about auto demand, and the kind of growth that the company has got to see, that is not likely to happen. So auto ancillaries, yes, there is a problem. I'm not too worried about Motherson Sumi because the stock is already corrected, I think, about 45–50% of the peak. So there is a lot of this kind of global concerns that are already built in. So at these levels, I don't think it's a great downside. So if somebody asks me whether I would short or whether I would go long, my answer is I would go long on Motherson Sumi.
Okay.
Just looking very wobbly though. Before we start wrapping up the markets, both those names, Hemen, Kapadia, trading at the lowest point of the day. Would you believe that there is more downside here? SRF and Avenue Supermarts.
SRF, from a very near-term point of view, I am not very sure, Neeraj. I have a feeling, yes, we are at 1963. I think my daily support comes to 1927, but one, I would not short it at this point in time. And in terms of Avenue Supermarkets, it's a very peculiar situation, Neeraj. I have a feeling that we went to 1700 last week. If that doesn't get taken out in the next week or 10 days, I think this could be the beginning of a bigger correction setting in which it has been impervious to the laws of gravity. It's about time it started doing that, in fact.
Okay, one stock which has been bucking the trend not just today but over the past 3 or 4 days is Bank of India. There's been a surge in open interest as well, and this is largely towards longs. Of course, there was a lot of news with the government coming out with its OMO programs that has led to some gains, and after that the government, earmarking some more funds which will be infused into the public sector. Sumeet, come in on Bank of India now. Just last week it was trading at 90. It's already gained and it's now trading at 100. Do you think there's more strength in store for this stock?
Yes, absolutely right. There is a strength in this stock. In last 7 to 8 days time horizon, we have seen a one-way move from the levels of 78 to 100. Now it has broken the psychological level of 100 that will give a positive move in this stock. Closing above 100 will take stock prices to 105 is a 105 on higher side. That would be the immediate target, and if 105 is taken away on closing basis, we will see extended move till 115 levels in next couple of weeks. Those who have taken long positions in BOI should hold on the existing long positions. One can initiate fresh long positions with a stop loss to be placed at 96 levels on lower side for the upside target of 105 and 115 levels.
Okay, let's start wrapping up the markets, and it's not looking all that great today. Not that it's fallen too much, but we were trading better for the first half, only to come off quite rapidly in the second half, and a lot of high frequency mid-sized names have come off quite rapidly today. Anyways, we'll talk about all of those, I'm sure. Let's just talk about the index first and the index components. 0.75% for the Nifty, about 0.5% for the banks, the mid caps and the small caps. The small caps were down 0.5% at the start of the show, now down about 1%. So the small caps have lost out quite a bit. As I said, I think the broader end of the spectrum has witnessed quite a bit of selling. The mid cap index too down about 0.5%. Let me talk about the large caps. Specific pockets, firstly of strength, and it's IT by and large. So TCS, Wipro, etc. have all done well. Infosys marginally higher in trade. Bharti Infra rises and up about 1%. Kotak Bank has 1% gain. Indiabulls Housing marginally higher. Can't see a Yes Bank in this list now. It was the top gainer at the start of the trading day. What's not done well? Commodities. So JSW Steel and Hindalco both have corrected. Hero MotoCorp, Bajaj Auto, Eicher all in the red. Tata Motors down about 2.5%. Oil marketing companies like BPCL have corrected, and HDFC, the heavyweight, is down about 2%. I guess it would be amongst the top contributors in the losing side in today's session. But large caps is not all it. The mid caps and the broader markets, Agam, some of the cuts have been fairly sharp in the last couple of hours.
Very sharp, with a good surge in volumes too. So there certainly has been a lot of pressure when it comes to selling, and intensifying pressure, building on the kind of selling that we've seen in the previous couple of sessions too. Let's start off with something like your SRF, because SRF of course is one of those stocks which saw a very deep correction for the second straight day, but today the volumes have surged and it is likely to close at day's lows, down as much as 9%. Jubilant Foodworks is the other one. This is a very curious one, considering so much strength that we see in Jubilant Foodworks over the previous few months for that matter. It's down 7.5% today, again closing at day's lows. Avenue Supermarts is the other surprising one. I don't remember the last time I have seen Avenue Supermarts correct 7%. Yes, it has seen gains on an intraday basis of as much 6, 7, 8%, but not those cuts. And well, this one is again reeling under pressure, just short of the 1540 mark. HEG along with graphite, something like that, well, that's also seen pressure. HEG is currently down around 6%. Graphite is well down. In fact, okay, so that's down 5% too at 755. We had news in Max India. It just so happens that it's actually come off and closed at the mark of 80. That is where you're seeing the deal which is going to go through when it comes to Radiant Life. But on the gaining end, and there have been a bunch of gainers here. Infosys is right at the top of the NSE 500 gainers list. It's advanced by around 5%. We also have some gains in REC, which is looking at a little bit of a recovery. That's up 4.4%. GE and T&D, that's the other one which is gained on the back of wins. And if we can pull up Bank of India as well, because if I'm not mistaken, it's seen the 9th straight day of gains, and it continues to move in with fresh longs at 100 mark. So, well, some gainers there as well. That said, Neeraj, well, there certainly is a lot of pressure towards the downside, and certainly are concerns, global concerns, which are bearing down on the Indian markets.
Yeah. Well, certainly seems to be the case, and volatile week because it's expiry as well, though tomorrow is a holiday. I think the Indian markets will welcome that with a sigh of relief. The volumes, let's pull up the volumes first and see how the volumes were today. The last 3 days we've fallen on fairly high volumes in today's session as well. That's 9 lakh crores. Yes, on expiry week you probably expect this, but fairly high volumes. So the cash market volumes are a bit lower. 24,000 is not par for the course. Looking lower on the cash side, but the F&O volume certainly high in trade.
And I'm sure we've seen a change in the advance decline ratio, where the ratio has worsened perhaps in the last 1 hour of trade. There you have it. That explains your advance decline ratio. So you have more than two losers as against just one loser on the National Stock Exchange, and this was pretty evident through the course of the day, especially in the last 1 hour, from what we've seen in terms of change in picture.
You bet. Contributors in HDFC, my guess is should be top of the list when it comes to the losers. Let's get in the contributors list and show you what led the downfall. Some of the financials would be there. Yeah, HDFC Bank. It's essentially the three heavyweights in the red, and no wonder that you've got a 100-point downtick. That's about 43 odd points being contributed, or 44 points contributed by just 3 stocks. Tells you the story.
Right, there you have it. That's how the things have panned out for our markets. There is some weakness, but with that, I'm going to take it forward for our technical experts. Sumeet, coming down to you. Your closing thoughts now that the Nifty is closed down 90 points at with just about 10,660. What would you do with the Nifty now?
The closing is not that good. Looking at the index chart, it seems that some more correction can be seen till 10,600 levels or 10,590 levels. Better to wait for clear direction, wait for next 1 or 2 days, let the index give closing about 10,700 or 10,750 levels. Once that happens, then only we will see a good up move, else the index will move in a range of around 100 to 150 for next couple of days. Downside, it has supported around 10,600, 10,590 levels.
Okay. Well, that's the view from Sumeet Bagadia, and the noise that you hear in the studio is because it's Christmas and the spirit is on and out. But just wondering, will the Christmas spirit last? Hemen, Kapadia, very quickly. That's okay.
I wouldn't be too bearish at this point. A small bounce is coming either tomorrow or day after, so I wouldn't be too bearish.
Okay then. And do we have the Santa coming? Merry Christmas, Santa. You're disturbing our show. No show. The Santa says no show. But hey, Santa, do we have our gifts? Okay, and we also have a gift from the Santa. Thank you, that's a 5-star. What about a guest?
Thank you.
Thank you.
Wow, me. Thank you. Merry Christmas, Santa.
Santa, we want you to laugh out once. Oh, ho, ho, ho. Thank you so much. Thank you so much, Santa. All right. Well, chocolates and festivities notwithstanding, Hari, do you think the spirit will last? Or there's more downside?
See, I would believe that the market is broadly in a range of over 10.4 to 11, and I'm not very bearish. I would agree with Hemen on that front. I'm not very bearish. But yes, 2019 is going to be a lot tougher. I keep telling a lot of my clients that 18 was bad, 19 could be a lot worse. You have elections, you have US yield curve, you have Fed, a lot of I think question marks. You have Italian bonds. Too many question marks in 2019. So yes, be prepared for a volatile year, but don't worry too much about downside corrections.
Yeah, and for now, just worry about how you're going to party tonight, Agam, because it's Christmas. Gentlemen, all of you, thank you so much for joining in today and giving us your thoughts. Really appreciate your time, and season's greetings to everybody. And from Agam and me and the team that put this show together, thank you so much for watching. Well, wish you could have given the chocolates, but we'll give you the wishes anyway, Joyce, and come back with the market wrap.
Yep. Just stay tuned in. We'll be back in just a bit.